Good evening, everyone. Tonight is the Town Council special meeting, Thursday, January 21st, 2021 via GoToMeeting. We will now do the pledge. Dennis.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you, Dennis. So our one and only agenda item this evening is to receive and accept the independent auditor's report on fiscal year 19 to 20. Our auditors are here, and I guess, Joe, are you going to be the one that's going to be doing the update here?
Yeah, I'm going to start it off, and halfway through, hand it off to Catherine to finish it up.
Great. Thank you so much.
Sure. So we're going to talk about, I think we have 4 documents to talk about. The first 2 are the actual financial statements, the CAFR, the bigger document, and then the second document I'm going to talk about is the federal and state single audit. So as far as the audit goes, the opinion on the financial statements are on pages 9 through 11. Again, you receive unmodified opinion, which is the type of opinion that you're looking for. No problems, no scope limitations, and any of those type issues. Starting on page 12 through 20 is the management discussion analysis. This is really a good executive summary of what happened during the fiscal year and any significant changes in operations or activities as compared to the prior year. So I do recommend that to get a good overview over the financials and what happened, that you read that specific section. So there's financial highlights, talks about the government-wide financials, the fund financials, such as the general fund, where your unassigned fund balance was 20.57%, which is a very strong fund balance position. So you're in good shape there. It also talks about each of the other major funds, which are on exhibits C and D. So the operating results for those funds. Talks about capital assets, any significant additions during the year, long-term debt, what your changes were. So you netted out to a $2.3 million increase because you issued bonds during the fiscal year. So starting on page 24 is Exhibit C, is looking at the first column is the general fund balance. So your fund balance, your unassigned fund balance was $11.1 million. As we talked about, that was almost 20.6%. Again, a very strong position. Your net change in fund balance on Exhibit D, which is page 20, was an increase of almost $3.4 million. So that certainly increased your fund balance percentage significantly this year. The budgetary statements, basically what you approve for budget for revenues and expenditures are on pages 94 and 96. So the revenues came in excess of budget of about $1.8 million, and expenditures were under budget by about $1.2 million. So that's the majority of your increase in fund balance of that $3 million that we just looked at. Starting on page 32 to 92 is a lot of different pages of footnotes. The only ones I'm going to highlight is just 2 of them. On page 57, there's a we call it coronavirus contingency note. It just says at that point at June 30, we're not sure what impact it is going to have. So that's a different note than has been in any reports in the prior year, and it was recommended by the AICPA, our profession, that at least not only for governments but for all audits that be something that's at least discussed if there was known impact or if it was an unknown impact. And then on page 92, there, in case anyone looks at that page, we did have some, we call them prior period adjustments. Basically, it was for 2 major items. Some of it was reclassifications. None of those were significant. We did have an impairment, we'll say, on the school building because you weren't using it as school. So GASB's rules say once you change the use, so of course that's a non-issue now because you did sell that subsequently. So at June 30, once you stop using it as school, that's a technical accounting and some additional monitoring costs. We're supposed to project monitoring costs for the landfill. So we added those in also. Looking at your pension fund, starting at page 98, the town plan is 62.1% funded. The education plan on page 101 is about 73.5% funded. And the volunteer fire plan is about 12.6% funded, but that's a new plan. It was established in 2017, so it would be expected to be lower than some of the plans that have been around longer. So your plans are a little bit on the low side, depending on when they were started. But if they've been started for a while, you're looking to be somewhere in the 80s as far as funding percentage. And a lot of it's been, market driven in the last couple of years, and subsequent to June 30, I'm sure your percentage is a little bit better. And you have a small OPEB plan, but you're not actively funding that, so that's something to look at if need be in the future. Then I'm going to hand it off to Catherine to talk about the other two reports.
Right, so you also received a federal and state single audit report. On both of those, we had a modified or clean opinion, and we also had no findings or question costs on the programs we tested. For federal single audit, we tested 1 program, and for the state, we tested 3. You also received a communication with those charged with governance. In that letter, we talk about significant accounting estimates, which include the pension and OPEB assumptions and the landfill assumptions related to the liability. In addition, the financial statement disclosures were consistent and clear. We received representations from management, and we had 2 past adjustments, which were listed in the letter. Next up is new applicable GASB standards. So GASB 84 will be applicable for fiscal 21. This one relates to fiduciary activities. The main thing will be implementing agency funds, which you have for the student activities, will be changed to custodial funds, which just means slightly different presentation. And you'll also need to evaluate some of your defined contribution pension plans for potential inclusion. And then GASB 87 will be implemented in 2022. This one changes accounting for leases, so you'll need to start gathering information on the leases that you do have. And then the last thing we'd like to discuss are the recommendation letters. It's a first-year audit, so there tend to be a lot more recommendations than you would see in subsequent years. Because we have the new perspective, we just like to put everything we see on the table. So we have a couple of recommendations relating to segregation of duties for both the town and the Board of Ed. The first of which is related to payroll. We have a couple of recommendations here that someone other than the person who processes payroll be responsible for entering new employees into the system, and that someone other than the person processing payroll should be responsible for distributing the payroll checks. This is on both the town and the Board of Ed side. In addition, we also recommend that payroll registers, the approval of payroll registers be formally documented. And for the town, we also recommend that all employee pay rates, including seasonal employees, be approved and documented and retained in personnel files. For both the town and Board of Ed, we recommend that they develop and implement a new vendor form and approval process related to that, and that the accounts payable clerk be restricted from having the ability to enter new vendors into the accounting system, and that after checks are signed, they not be returned to the accounts payable clerk. We also have 2 recommendations relating to tax. The first one is that we recommend the ability to void transactions be limited, or that a void report be reviewed and approved. And recommendation related to tax is that the finance department reconcile tax revenues and receivables to tax system reports. And the last recommendation for the town is that we recommend the town implement the review and approval process of journal entries prepared by the Director of Finance. For education, we have a couple more recommendations. The first one relating to cafeteria revenues, that they be recorded in the accounting system based on the daily sales reports rather than based on deposits, and that those sales be reconciled to the amounts deposited. And relating to budget transfers, the Board of Ed has a policy that budget transfers be approved between broad budget categories, which isn't currently being done. So we recommend that the board review and approve budget transfers in accordance with their policy. And the last couple items in our letters are best practices. The first one relates to bank accounts. We recommend that authorized signers for all education-related accounts, the superintendent be an authorized signer, and for all town accounts, either the town manager or the treasurer, which will provide proper monitoring and allows easier access to information for the town. This is something we recommend to all our new clients. We recommend the town develop and implement a fraud policy, a policy that would specifically address fraud, the town's position on fraud, and any consequences for non-compliance with the policy. We also know that the town has a fund balance policy, but it's a little bit old, so we recommend the town review and update the fund balance policy. And our final best practice is relating to the police and volunteer firefighters pension plans and the OPEB plans, that the town create a formal investment policy for the plans.
So happy to answer any questions that anyone might have on any of the board documents or anything else.
Any council members have questions at this time?
Hi, Christine Goupil. Just a clarification on the funding. You had mentioned that you had wanted it at 80%. Was that accurate?
That was just a general benchmark, that 80% is in the 80s. Obviously you want it to be 100% eventually, but in the 80s is considered pretty well funded as far as depending where you are in some of the amortization. So that's just a general benchmark that's kind of used in the industry.
Just because the previous auditors tagged it at 60%, is it more of like a 60 to 80%, or is it just that your policy, that your recommendation is 80%?
That's not really our policy. That's just more what the industry considers a well-funded plan is somewhere in the 80s. So that's what the benchmarks. It's not really our benchmark. It's just what's talked about.
Okay, thank you.
Dennis?
No, you go ahead, Mark.
Mark? You're on mute.
Mark, you're on mute.
Dennis, why don't you go ahead?
Okay, I'll go ahead. I just had one thing about the pensions and OPB investment policy. It says currently the police and volunteer firefighters pension plans and the OPEB plan do not have a formal investment policy. We recommend the town create a formal investment policy for the plans. If I'm not mistaken now, I think the volunteer firefighters pension, that's not a town agency. So do we have any jurisdiction in trying to create a plan for them? Am I coming through?
Yeah. Well, since the town has custody and it's a required disclosure, since it's in your financial statements, because you have custody of the assets, so we're just recommending they certainly could come up with the investment policy, but somebody come up with a formal policy so that it can be measured against what they're actually investing in and for the disclosure requirements.
Mark?
Yeah, Joe, additional funding needed to bring us to 80%. Would you suggest we do that over a 2-year, 3-year period to bring it up to 80%?
I think the actuary is probably in better position to kind of help you with that. I think it's just kind of giving you perspective. A lot of we'll say towns may, if they have a good year, employee benefits are down, they may look at just putting extra in the pension when you can, just being conscious of that. That's something on your radar is that needs attention. I mean, the actuary is taking that into account in the recommended contribution now, but obviously the higher percentage funded, the lower your annual contribution would be. So I guess the recommendation or the comment was more just so it'd be something maybe you think about if you have, nobody ever has any extra money. I hate to use that term, but if there was an opportunity during a budget year to put more than maybe you budgeted in because you had a good year, either in another account or in your employee benefits area, maybe, to put some money in that direction.
What is the Joe, what are the dollar differential between 60% and 80%? Is that 60% of the 13 million?
The one that's at 60. It's about 4 million for the one that's at 62%. 80% is about 17 million, 17.9 million, and you're at 13.9. So
Additional $4 million to get us to 80%.
right, right. And again, it doesn't necessarily have to be a 1 year, but just something to look at and again, the market, if it stays where it is, you already made up some of that, but obviously can't rely on that.
Anyone else? Good. All right. Nothing else? We can continue on. So good. You, Joe and Catherine, we're all good?
Yes. Yep. Yeah. That's all we had, unless you have any
All right.
questions.
I mean, if nobody else has any other questions, we can move forward with the motion to receive and accept the independent auditor's report.
So moved.
Is there a second?
Second.
Any other further discussion? All in favor?
Aye.
Aye.
Opposed? Abstain? All right. Again, thank you very much, Joe and Catherine, for all your work. We do appreciate all your help in this.
Sure.
Thank you.
All right.
Just look for a
Good night,
motion to
everybody.
adjourn. Motion to adjourn?
So moved.
Second?
Second.
All in favor?
Aye.
Aye.
Opposed? Abstain? We're good. Thank you again, everyone.
All right. Good night.
Have a good
Good
night.
night. Good night, all.
Thank you.